Ladies and gentlemen, welcome back to another Relentless recap. As you are tuning in, hit that thumbs up button, and if you're a new viewer, consider subscribing to our lovely channel. Before we jump into today's recap, let's talk a little bit about our disclaimer and let's talk a little bit about the risks of trading. First and foremost, remember, like any other business in the States, trading does have its pros and its cons. And yes, it is risky business, right? There are pros and cons to this field. It's not all glam and glitter like you'll sometimes hear, the people who won big on GameStop and AMC and so forth, all right? Day trading is hard. It's not easy. It takes time. It takes energy. It takes discipline and consistency to improve. So limit your exposure to risk by using a simulator if you're now starting out. Even if you've been around and you're not quite as consistent, utilize a simulator, utilize risk money that if you lose it all, it does not affect your life. Remember to not copy trade me. What I'm doing here is just broadcasting to the world how I trade, my style. The YouTube broadcast does have a delay. So remember, do not copy trade. You have to understand how to trade, and build your own foundation for yourself. It's all about that foundation, and there's a formal and informal way of doing things. All right. With that being said, lastly, remember, I do not invest money for my subscribers. Be careful with the fake accounts and impersonating accounts out there on all social media platforms, including Discord, TikTok, Facebook, Instagram, everything. There's a lot of fake relentless traders popping up and trying to trick people into sending them money and personal information. I will never ask you for cash. I will never message you first. Remember to stay safe out there. All right, guys. Now let's jump into today's recap. And today's topic is going to be risk management, and also the unforeseen things that can happen to us as we are attempting to manage risk. Things such as the power going out, the internet going out, hotkey errors, you name it, guys. There have been stories. There's a guy, he had a cat in his house. The cat jumped up onto the desk, climbed on, and walked on top of the keyboard. Before you know it, the guy was in the trade big size. Comes back from the bathroom, he's blown up his account. Or in better phrase, the cat has blown up the account. Things do happen, guys. Things happen. For me, I've been caught before with the internet going out. And so it's always good to try and have redundancies. Redundancies is going to be a huge word for today's recap. You have to put safety measures in place to try and prevent things from happening. And even when things do occur, despite the safety measures, you still have to react accordingly. So today we're going to talk about a loss that one of the students here in MMU took today, trading stock ADTX. And let's talk about how this loss happened. So, there's a lot of talks about how this one could potentially go back up to some insane numbers like we had earlier before. So we check out the daily chart, we'll see that this is a stock that's had a couple of splits, but it's been known for giving some huge moves up and then pulling back. And so today it's pushing up, and we're watching at it to see, how far can it go? This thing got up to $60 at the time, and we started to think, hey, this thing might just go to 100. And so the MMU member, was watching it and said, you know what, I'm going to throw one share out there just to see how this thing does, just for good fun, to see how, if we keep going up. And for those of you who do not use DAS Trader, right, let's take a look at the DAS Trader platform. This is what it looks like, the DAS Trader level 2, right? So, hotkey errors can happen, guys. So, and this is exactly what happened to the student today. Let's assume I'm watching at this stock, ADTX. Let's pull it up here. Let's pull it up on the level 2 as well. And let's say I have 500 shares. Let's say I'm comfortable with 500 shares on this stock. DAS Trader, in the order entry window down here, refreshes the order size to the default size that's in the settings. So let's say I click on another stock, BDRX. Look at what happened. My order size has changed automatically back to 1 share. Now, for those of you using DAS Trader, I would recommend having your default share size set to 1 share. This can prevent the mistake that happened today with the student, which was them switching from stock to stock, coming back to take that trade, and for them, their order default was set to 200. And so instead of buying with small size like they had previously in the order entry window, they accidentally bought 200 shares into the halt, and this thing gapped down instantly. And it happens. It happens to the best of us. 3 days ago, right? 3 days ago, even for me, trading as long as I've been trading, I had two order entry windows, two active trader windows here, in terms of Thinkorswim lingo. So BDRX, you guys know Thinkorswim doesn't have the best hotkeys. So I had one order with about 3,000 size, and another order, or I believe 4,000, it was a cheaper stock, and another one with about 2,500 size. And you know what I did? I switched over to an expensive stock to check out the charting. In fact, a stock just like ADTX, and the stock started to move again. I'm watching right here in the middle of the screen. I'm taking trades, and I said, you know what? I need to size down. And so I go over here, but instead of it being the same stock in this case, which would be BDRX, it's ADT. So I'm buying a stock that I'm not even looking at blindly. How dangerous is that? Extremely dangerous. And I happen to get lucky with a winning trade of $180. There will be days, because it's something it's an honest mistake. There'll be a day where I buy in like that, and it can literally be a stock like this where it's a halt down, or maybe it's just flushing down, and boom, I'm down 5 grand, $2 a share instantly. And so there are things that we do to help manage risk. First and foremost, for those of us with bigger accounts, it's good to always take cash out. Take cash out, keep the account at a reasonable amount where you still have buying power, but it's not super big. Do we really need hundreds of thousands of dollars in the account? The answer is no. Because what can happen is that you can make a mistake like this. It doesn't always have to be emotions. And before you know it, because your account is so big, you accidentally can, buy the amount of size, right? Because you put that extra zero or whatever it might be, a fat finger mistake. These things happen. So be careful, have redundancies in place. So for all of those who are watching on, make sure if you're using a platform like DAS, where it might be easy to forget the order is being updated automatically. For me, I have mine set to 1 share. So when I switch from stock to stock, I feel like it's better to buy with small size than to be in too big. This is how I manage risk. This is part of what I do. Taking cash out of the account, having a cell phone right here, having a cell phone with separate internet from the internet from my Wi-Fi. That way I can log into the Thinkorswim application and buy and sell a position. Also, if you are, at home, try and get a generator. Try and get a backup generator, that's down, right with your, whether it's underneath your desk or whatever it might be. Have it down there, right with your router, your modem, and everything. That way, even if the power goes out, you have some time. Your internet is still on. It'll give the alarm sound. Gives you a quick minute to exit all positions and things like that. So, remember, guys, day trading, it is risky, man. It is risky. Every time we hit that buy button, we're looking for nice opportunities, but there's always risk. It's just how it is, right? It's always risk. Where that light is, there's a little bit of dark. But what I will say is that nothing great is without, risk. So ultimately, we will have to put ourselves out there, and we'll have to try and be the best managers that we can be. And look at this stock in this case. It's going to bounce up. And this is the thing with the market, that sometimes it feels like, it's giving these moves like this on purpose to try and frustrate you. Because you know what happens? If you're to average down here, right? If you're to average down, what happens is that you end up getting bailed out, maybe for a break-even trade. And imagine the stock has to go from 68 to 28. It has to go from 28 to 68 to be break-even again in terms of this position. If you happen to average down, what this does is it creates a terrible habit and behavior, because it tricks you into thinking that every time, if you're ever to be caught, the stock will bounce back up. This is like 1 out of 10. I mean, and look at how aggressive this curled back up. This is 10% chance that this stock like this, like, gets back to where it was and then some more. More times than not, this will continue to go down and go all the way down till it gets to about, 40, 50 cents. So be careful, guys. Never average down. It's always best to take the loss, realize the loss, move on, right? It's part of trading. It sucks when it happens. It can happen to anybody. The honest mistakes. As mentioned for me, I just happened to get lucky in it being a small green trade. Could have easily lost $1 a share at 2,500. 2,500 shares on about a $22 stock that's flying up and down. I'm lucky to be out with just such a with no damage at all, right? But things will happen for you and things will happen against you. And hopefully, when it happens, it can happen in our favor. But even when it doesn't, that's okay. We understand. Because sometimes you make the mistake and the stock does go up higher and the resumption opens up at 130 and you're up 30,000, you hit the jackpot. So things will happen for you, things will happen against you. And when they do go against you, we understand it, we take it for what it is, we never panic because we have the mindset of the long term, which is, hey, okay, even if I have to take some time, even if I have to take a day, when I do come back to business, I'm gonna chip away like I always do. If I take like a $30,000 loss tomorrow, that's the mindset. All right, okay, big loss, but we're gonna get right back. Can we get back to a few $100s every day? Because guess what? By the end of the week, the month, we're already gonna be chipping away. 2 months, it might take a good month. We're back up, and so it's over time, guys. Right? Never lose that perspective in the moment, even when things get tough. So with that being said, let's jump into some of the technicals from today's trading. I know I did go for a little bit right there, but I think it's pretty big for a lot of us here to remember the risk of what it means to be a day trader. All right, even when you don't want it to happen and when you're managing risk well, it can happen. So let's talk a little bit about stock ACER. I was asked today to show some archives, so I will. Stock ACER, cheaper stock. This one started out around 50 cents, pushed up all the way to 129, dipped down, and from about 90 cents, this thing took off and absolutely went crazy. So I'm going to show you guys a resumption trade that I took right here to start getting myself a little green. So let's take a look. So resumption is coming up, and I'm watching this thing to push up a little bit and then dip. Look at those buyers there at 31. So it does bounce initially at 35, but it doesn't rip through, which tells me that this thing is looking for a pullback. And so it's a very quick flush right there. It's almost instant once we do get below 28. But the moment I see we get down, I start buying. And I should have bought bigger size. But it is sometimes tricky because the halt down is so close. So right here, I'm hitting for 1918, and I'm in 4,000 shares. Can we see the bounce? So, the concept here is, hey, you drop a basketball, a football, anything from a very high place, it's going to give a bit of a bounce. Hopefully it's not a bowling ball, because the bowling balls, they just keep sinking, right? But can we get that basketball to bounce up a little bit? And that's the idea behind this type of trade. We're dropping from a little bit of a higher place. Can we get a small pop? And so there's 24, and with 4,000 shares, every penny the stock goes up in my favor. I'm making $40. The risk is there. And so in this particular trade, my stop is, hey, if this thing starts to print red on the tape and we start dropping from 18 down to 17, 16, I want to cut this for a 2-3 cent loss. Keep it tight. Keep it tight and watch and wait for potential future trades if it's going to hold up. So I'm in and I'm selling right here, 24. Good trade. And I'm going to get the intuition that the stock wants to go back up. So I'm going to get aggressive here, although it's a little sloppy in how I did it. So here's 21. I'm in 4,000 as we're holding up above 20. Right here, I'm not expecting us to see 18 again. I'm thinking it's going to go. So I believe, being that I had that feeling, I should have bought big size. I should have bought my full position there. But I think I was still being a little too cautious in case we did still fail. But once the intuition is there, I need to hit it. I should have bought 3 times and gotten it at about 12,000 size, maybe even more, and watch, wait and watch, and put the stop in place again around that level of 18, 19, maybe 17. So, once we start to move up a little bit here, 24, I'm going to buy again. And right here, I'm thinking, yes, it's going to start going fast. 25, 26, 27, 28. And I'm going to be selling up above 30. So right there, I'm going to buy again. But the stock starts to slow down in its volume. So where I'm expecting to see now, we're already at 26. My average is 23. Right now, I'm expecting to see 27, 28, 29, 30. Starts to slow down a little bit. Starts to say, you know what? We might not see this push. And I came all out. Wanted to see it immediately. But here it comes. It's a little delayed. I tried to buy back. I'm going to get in 25. Can we see that push? There it is, 30. So the move I was looking for, okay, still caught a piece of it, but it's not what it should have been. Again, really and truly, I should have been 12,000 size at 20, or let's say 21, and now looking to sell half and even look to hold a little longer, because let's fast forward a little bit. Another 30 seconds. Another 30 seconds. 1 minute later, we're already back at 40. Isn't that insane? 1 minute later, we're back at 40. And if I'm in 12,000 size at 20, every 10 cents would be 1,200. Just like that, guys. I'd have been up 2,400. Or okay, let's say assume we sold half up there at 30. We could have been up over 15, 1,600 for sure if we were to really execute this trade solidly, like how I know I could. So, it takes a lot more discipline and patience. You have to be more firm with for me, I have to be more firm to just be in there, hold the position, give it a chance, let it go. Because, sometimes, I started trading during a bull market where breakouts were just very, very, very aggressive. Imagine if you started trading the week of GameStop and AMC. And, essentially that's what happened to me in the summer months of 2020. And I became so used for months on end seeing breakouts work out right away. And even to this day, you can see I still have trouble holding longer when they're not working as quick as I would expect them to. So there's still things for me to work on to be better. But this is essentially how I made money, right, on this stock. And so in other areas, when we would pull back and we start to base out, I'm buying the low. Or if we're getting a good formation for a flag, kind of like what we had down here for this move up, I'm buying the high. Did I capture that flag? I want to say I did. Let's bring it back a little bit. So I was actually, okay, that was, hold on, we got to go back some more. Yeah, so I was only at 70 bucks. So as we broke over 20, I caught a trade in here going up and did okay. So yeah, break the new high of day levels. Once we're getting the new high, I think I waited for 19 or 18 here just so to be a little bit more sure we're getting over the resistance. But yeah, for me, higher low, man, higher low. Sometimes, unfortunately, the last couple of days, low has not been good for me. I also have been hesitating on some breakouts, so there's things to work on. But yeah, so far so good. It's been a good month. The monthly recap, I think, will come out on Monday. Excuse me, Saturday. Saturday for the monthly recap. Which will be 2 days from now. But as we're heading into the new month, let's not forget, guys, that day trading is risky. Let's not forget that despite some of us being able to be green most of the time, it's still hard. It's still hard for us. We still have to study. We still have to do our due diligence. We still have to come back and watch the charting like this. It's not a matter of just, hey, I made some money, I can slack off, party, and then just come back and hope to be green again. You got it's constant. You got to keep putting in the work. It doesn't stop. It doesn't stop, and no one is coming to save us. So we have to save ourselves by doing what's necessary to ensure success. So to not let this one get too long, I'll wrap it up here. So check out those links down below. For those of you interested in the day trading course that I have, be sure to check out MMU. We have some big things coming, and we're so excited for the conference here, Traders for a Cause. We're very excited to be flying out one lucky gold member to hang out with us for that weekend. And also, for everyone else who is looking to take part, guys, be sure to use coupon code VEGAS for 40% off checkout. It doesn't get any better than this. Our course, and I'm saying our because you have two mentors, two six-figure traders. Marcelo, guys, let's take a look at how Marcelo did today, right? Let's take a look at how Marcelo did throughout the week. Yesterday, $5,000 in 30 minutes. Today, on the month, a $40,000 month, right? Absolutely incredible. Absolutely, positively incredible. So be sure to join us, right? Join us and be able to gain access to both of us via one-on-one mentorship. Gain access to our 0 to advanced, right? From A to Z, beginner to pro course. We have ongoing lectures, weekly Q&As, archives from myself and Marcelo. So you might say, hey, Relentless, what is the archives? Well, that video that I just showed you with all the trading that I was doing, yeah, guys, take a look at this, right? I want to show you guys something. So just take a look at this, right? This is my video section here. Just take a look at all the archives that I have that I keep posting, every day, essentially every day. So if you want to be able to go back and see all my trades, so when I took them and why with the level 2 included, and rewind, fast forward as many times as you might want to, be sure to check it out. All right, MMU. You also will gain access to our Discord community, become a lifetime member, and you'll have access to the inner circle of members of students. The students have a designated part of the chat room that only they can access and interact and engage. So if you want to be part of it, be sure to check it out. This is where we're going to shut it down. It's been RT, your favorite YouTuber. And I am, of course, signing out.